yesterday, we looked at United Bank for Africa's 2024 full-year results, and now we've got Zenith Bank. So two tier 1 banks. Let's take a look at the highlights here. Gross earnings, 86% climb, practically 4 trillion naira for Zenith Bank. I mean, it's the gargantuan numbers here. Assets almost practically 30 trillion, 47% climb. Net interest income, 134% jump there, 1.72 trillion. Pre-tax profits, 1.3 trillion. Profit after tax, 1 trillion naira. Praise Ihansekhien is with us, Head of Investment Research at Meristem Securities. And I haven't seen Praise in such a long time. Should I be saying Happy New Year?
Same to you.
Good morning, Praise. You are a busy head of research. Good to have you, and thanks for making the time for us.
Okay.
So, top line, what's your reaction to those results from Zenith?
I think for all intents and purposes, this result was this stellar performance.
Yeah.
You know, I mean, it came out yesterday, and just taking time to look through, I was looking for positive. And I was trying to say, where's the negative? You know? So it's not surprising. Even from 9 months, from Zenith Bank's 9-month result, there were already signs that, you know, the end of year was going to be very positive. Looking at their gross earnings and performance, you see a very significant increase, the net interest income,
right.
And then looking at loans, income from loans and deposits, that's more than double.
Right.
Looking at the breakdown, more than double what they did in 2023. So Zenith Bank, I mean, the performance was, by all intents and purposes, very good. Even looking at their asset yield, so when we're looking at the asset yield, we're comparing what they were able to make compared to the interest earning assets that they have. Yeah. And at 2023, you had asset yield of about 8%, but now we are looking at 13%.
Wow.
And then from between, I mean, that's even higher than what they've had since, say, 2016, because between 2015, 2016, they had 9%, 10%, and then they came to 2018 and it started reducing, but we've seen that jump back to double digits. So it's a very, very interesting result.
All right, we broke a few things down. What do we gain here? Interest, rather income breakdown. I wanted to get your thoughts on, or was it the fees? Let me see here. We got a lot that we wanted to get through with respect to the, so this is interest income, 2.72 trillion. You've touched on that. Let's flip on to, I think, the breakdown for so so I think here is the big one, of course, is customer loans, and you touched on that. So 125% jump there. I guess looking at the breakdown, does the 125% rise in customer loans suggest more people are borrowing, or it's at the corporate level? How would you assess the big jump in loans there?
It's an interesting play, because 2024 was supposed to be the year for lower borrowings, lower volumes, you know. But then you need to consider the fact that the customer loans is a price and volume play, right? There is the price point of view, which is the interest yield environment. The fact that interest rates are now, you know, going up. They were really high in 2024. Monetary Policy Committee increased rates significantly, and so of course that impacted the price part of it. And then there's also the volume part of it, where the banks were able to grow their loan books, you know, significantly, and then that combined impacted the customer loans balance, and then you had, you know, that significant increase of, I think about, you have 124, about 600 last year, and 2023, and then 1.5 2024.
It's funny, we were just talking about treasury bills and bonds in the last segment. We see how much they earned from that. All right, fees. I wanted to, I think we're going to get the fee breakdown for the bank, right? And account maintenance fees. I always tell people that, listen, to check on your account and give you what your balance is at any time, it costs money, right? But here, so account maintenance, 72 billion, 54% climb. I was quite surprised to see foreign withdrawals. I didn't know they were making that much money from people who make, you know, foreign currency withdrawals overseas, and then e-products. But I did want to quickly get your thoughts here. Let me see, where do we start? E-products, the 80 billion, 54% jump. Does that suggest more Nigerians are just using more digital tools from banks? What's your thoughts on the e-products? Electronic banking.
I saw a report on financial inclusion last year compared to, I think, the past 5 years or so in Nigeria, and there's been a significant improvement in moving from cash transactions to moving into transfers, using e-products in in Nigeria. So I think banks definitely they've positioned themselves to benefit from that. Zenith Bank has a payment platform, ZenPay, that allows them to also take advantage of that. I mean, there especially with what happened in 2023 with the cash crunch and the way everything almost scattered the economy. There was a lot of movement to transfers and using e-products for transactions. So definitely Zenith Bank was able to also position themselves from the results we're seeing. You're cutting trouble by mentioning account maintenance fees because that's very controversial. People would say, well, Zenith Bank debits me on Sundays. Yeah. I'm in church and I'm praising God, and I just see.
You see a debit.
I just get debits
while you're praising the Lord.
Account and maintenance fees on Sunday. So that's quite interesting to see that my weekly debits
is going there.
So but it's also a thing where last year there was a significant touchlight on the fact that we have a lot of USD deposits in Nigeria.
Right.
And then that's why the CBN was also trying to get those domestic dollar bonds, the one they issued last year. So of course there's always been that in Nigeria, but I think it just goes to show how much the banks are also being able to get fees from all these different points of revenue lines. Yeah.
Great. I think up next, customer deposits, which, I don't know, maybe a similar question to the loan. So almost 22 trillion, 44% climb. Anything to glean from there? More customer deposits, that suggests some kind of recovery, or more people are depositing with them, or then that also includes businesses. What's your takeaway from larger deposits there of almost 45%?
The interesting thing is about 77% of this customer deposits is in savings account and current accounts.
Oh, okay.
Yeah, so we call it the CASA mix.
Yeah.
And banks use this to reduce their cost of funds because, of course, the interest rate they pay on current account and savings account is not as much as what they'll pay on the term deposit, on the fixed deposit, these other core deposits. So it's quite interesting to see that, of course, a lot of banks have this dynamic where, I think per average is about 77 also for customer deposit and the CASA mix. So definitely you would say that there is more deposit going into, like I said, financial inclusion. We don't really want to carry cash anymore, and then you hardly find a place where you say, what's your bank? What bank do you use?
Right.
And then somebody's telling you, no, I want cash. So that would definitely have its own impact on the banks and the customer deposits and the bank. But then most of where their income is coming from is not really from the current account and savings account. It's the remaining about 23%. Yeah. That is where most of
That's
the
where the money is coming from. Fantastic.
Yeah.
All right. Okay. This is why we've got about 6-7 minutes left. And I want to split that between loans. Like these gross loans broken down by, 10.9 trillion, right? So 55% climb. But I do want to ask you about the loans by region. I thought this was, when I was going through the financials, I was just fascinated. So Southwest region of Nigeria, 8.4 trillion out of the 10.9, and it grew by 56%. Yeah. Meanwhile, South dropped. The gap between the regions is just what? And I bet Lagos just takes off almost that entire thing, right?
I was going to say that because I would wager, if they give us a breakdown by states, I would wager that Lagos takes the most of the Southwest. This entire Southwest is more than 70% of the total loans that they made to different regions. Yeah. So of course, Lagos, the Southwest is almost the commercial epicenter of Nigeria. You have a lot of, you hardly find a business that does not have an headquarter in Lagos and Abuja.
Right.
And then of course, also considering the fact that if you're going by sectors, I think that's the next thing that you're already showing me. Yeah. If you're going by sectors, you also have most of the funding going to the oil and gas industry. The banks are known to, give a lot of credit to the oil and gas industry. That's, for most banks, you look through their breakdown, most of their credit goes to the oil and gas sector. And then comparing that to the fact that the location of most of the oil and gas sectors would be either here, or if they have their main base is probably in maybe the south, but they would have a commercial office somewhere around this region. And then of course Lagos is, I think, we didn't see the breakdown by states, but I believe that Lagos would be the major place where most of this funding is going to.
So for people who come and tell me that, this region does so much business, and this is the region where the traders are, and this is the region where this and that, what does it say about the competitiveness of the states, versus in Lagos? I mean, how? Because I'm waiting to get these numbers from all the other banks and then do a full comparison across the board. I can't wait to do that. But yeah, what does it say? I mean, the other states just need to step up, yeah?
So I think there was a time I came here and I mentioned value.
Yeah.
There is always going to be a pursuit of value. The bank side, it's a business. It needs to make sense for them.
Right.
They would definitely take their funds. They would definitely try to invest and give credit to where they will have the least non-performing loans.
Right.
And so, considering a lot of things are happening in other regions, there are some other regions that you're having a lot of insecurity issues. You're having one state infighting or the other.
Right.
We don't want to go there, but there's so many.
Yeah, there's
so
one
much of
particular
that.
state in the south.
I didn't mention that.
Where there's a state of emergency and no governor.
So with all those things happening, we would relatively say that there is for business, it makes sense to have value. Value is a business. It is attractive for business, and Lagos is a very attractive, and the Southwest in general is a very attractive pressure point for business. But for other regions, maybe Abuja and Port Harcourt, that's it. But for others, others probably need to step up. Yeah.
North Central, I mean, it was 500 billion or so, which points to Abuja. On the and you've mentioned the industries, but I think let's see who was second place. I think second place was manufacturing.
Yes.
So again, now on that point, we've talked a lot about the need to diversify Nigeria's economy. And yet, when we see our trade numbers and we see these types of numbers, it's still oil and gas. By the way, manufacturing, I mean, I don't know how much we're making here. Isn't most of this loans for imports? Isn't that what they're importing in the manufacturing sector?
Most of it will be letters of credit, loans for imports, loans for even importing of raw materials. In fact, you would see, because if you look at comparing that, of course, like you mentioned, to foreign trade data and trade data in Nigeria, most of the trade comes from the crude oil.
Exactly.
And then the other part of it that really come from crude oil. You don't see a lot of machinery. Most of it will come from agricultural produce, although we still export some of those. But then, of course, the argument that Nigeria's economy is not diversified, I don't think I agree. Because if you look at the GDP breakdown, there is some diversification. There's a lot of diversification. The problem is that oil and gas is where the FX is coming from into the country, most of the sources. And so, of course, funding will go more into that than the others. It will be better if we have more diversification into the manufacturing and agricultural sectors in the FX space. So if we can have that, definitely credit will also be directed to that sector of the economy.
But then that means that those sectors would have to be selling something to earn the FX that comes into the country. Praise, fantastic stuff. I'm glad you came in. What's your outlook for the banking sector? I mean, we'll get more results as we come in, but does this, we saw UBA, they had healthy results. Now Zenith, and we'll look for the tier 2 banks as well. But you think going down the line of the, we're seeing, I guess, this is 2024 though, but then what is all this pointing to? I
think 2024 results are going to continue somewhat like this. Most of them are going to continue to see this kind of result. Of course, not 1 trillion.
Not profit after tax.
But significant numbers, because last year was a very positive year for them. And if you connect that to the fact that the financial services sector was the main sector that drove GDP of last year. So it makes sense that these companies in that industry would also report positive numbers. For 2025 also, it's definitely going to also be another interest, because now they have more capital to grow their loan books further, to increase technology and, do more. In terms of, I was looking at Zenith Bank's earnings per share, what it would have been if they had included the new shares that were added, and there's still a 17% growth.
Wow!
So the concern that everybody had for dilution of earnings per share, it didn't really materialize, for Zenith, and I think it's also going to be similar for a lot of the other banks that we're going to see. So the banking sector is actually, quite healthy right now. Even if the Monetary Policy Committee starts to cut rates, which a lot of us expect at some point this year, maybe Q4, if not January next year, for them to start cutting rates. The banking sector is just going to mean that they would pay less interest expense, even though, yes, they're going to maybe pay less, get less interest income, but it also means they're going to pay, they're still going to be spread for them. So it's a double-edged sword that keeps them protected, whatever happens in the macro space.
So this is why I have you on the show. This is why I've missed having you on here. Praise Ihansekhien, head of investment research at Meristem Securities. Thank you so much for the breakdown. There's so much to glean from these financial results. I love doing it. All right, that's going to do it for the Global Business Report. Do stay tuned to Horizons. From all of us, thanks for your company. I'm Richard Zuri.